Welcome to the Explainer. Okay, let's just dive right in because we have a really fascinating puzzle on our hands today. We're going to look at a company called SBET, a huge player in the Ethereum space, and try to figure out why its story has taken such a strange and frankly dramatic turn. So this number right here, this is our first clue. On Friday, August 15th, SBET stock just cratered, dropping over 15% in a single day. Now, a fall like that is always going to raise some eyebrows, but it becomes truly baffling when you find out what this company is actually holding. And that leads us to the central question we're tackling in this explainer. How on earth does a company sitting on a multi-billion-dollar treasure chest of one of the world's most valuable assets just watch its market value fall off a cliff? Let's break it down. All right, so here's how we're going to solve this puzzle. First, we'll dig into the company itself, which, on paper, looks like a surefire winner. Then we'll uncover a major misstep and see how a key competitor played its cards completely differently. And that will lead us to the one metric that explains everything, revealing why in this game, strategy is the ultimate treasure.
So let's really set the stage here. We are looking at SBET, the second largest public company whose entire reason for existing is to buy and hold Ethereum. And its performance lately? Well, it's been confusing, and that is putting it very, very mildly.
I mean, just look at this. It hits a high of almost $40, and then in about a month, it crashes by nearly half. That's not just a slight dip. That is a catastrophic loss of confidence from the market. So you have to ask, what went so horribly wrong? And this is where the puzzle gets even deeper, because when you look at SBRT, on paper, it looks like an absolute world beater. They have all the ingredients for success, and it starts right at the very top. So check out the leadership team. They're nicknamed Joel Squared. On one side, you have Joseph Lubin, a literal co-founder of Ethereum. This guy understands the tech on a level almost nobody else does. And on the other side, you got Joseph Chellam, a former managing director at BlackRock who was key to getting the big crypto ETFs approved. It's the perfect combo. Deep crypto credibility meets elite Wall Street power. And their business model, it couldn't be any simpler or more transparent. It's a four-step plan. Raise money, use it to buy ETH, stake that ETH to earn even more ETH in rewards, and do it all to grow value for shareholders. It's clean, it's focused, and it's really easy to get your head around. And they've said it themselves. This is the mission. No hidden tricks, no complex schemes. Every single move is supposed to serve this one clear goal. So with powerhouse leadership and a crystal clear mission, what could possibly be the problem? Well, it sure isn't a lack of assets. As of mid-August, the company was sitting on nearly 729,000 ETH. At the time, that was worth over $3.3 billion. So let's recap. All-star team, simple strategy, and a massive war chest of the very asset they're supposed to be accumulating. And yet the stock is collapsing. And this, right here, brings us to our first major clue. It seems the problem wasn't what they were doing, but how, and more importantly, when they were doing it. A series of really poorly timed announcements just sent shockwaves of fear through their investors. This timeline tells a story of just terrible timing. So on May 30th, things are going great, and SBET announces a $1 billion stock offering. This immediately signals a huge new supply of stock is coming, which can spook investors. Then, get this, just 12 days later, they unlock a bunch of shares for their early private investors, giving them the green light to sell. The combination created a perfect storm of fear, and the stock went into a total freefall. And then, unbelievably, they pretty much repeated the same mistake in July with the exact same result. Now, to really understand how damaging this was, let's look at their main competitor, a company called BMNR. They handled a very similar situation in a completely different and much smarter way. The difference in their strategies is just night and day. Where SBET basically opened the floodgates for its private investors right away, BMNR played it cool. They enforced a longer lockup period. They waited strategically, letting the market absorb new shares from one offering before they let early investors start selling. This small change was absolutely crucial. It built confidence that the company was managing its stock deliberately, not just panicking and flooding the market.
So, these completely different strategies led to wildly different outcomes, and you can capture all of it with one single, all-important number. This is the ultimate scorecard that tells us exactly what the market thinks of a company's management. It's called MNAV, which stands for Market to Net Asset Value. Okay, think of it this way. The net asset value, or NAV, is the value of all your ingredients. In this case, all the ETH. MNAV is the premium people are willing to pay for the chef, for the company's ability to turn those ingredients into something even more valuable. An MNAV of 1 means the market thinks your chef adds 0 value.
And SBET's MNAV? A painfully low 1.1. The market is basically screaming, hey, we'll pay you for the ETH you're holding, but we have almost zero confidence in your ability to manage it or execute a strategy that creates any extra value for us. It's a brutal verdict. When you put these two companies side by side, the difference is just staggering. Yeah, BMR holds more ETH, fine. But look, just look at that MAB row. SBET is at 1.1. BMR is at 2.0. This means the market believes BMR's management and strategy are so good, it's willing to pay double the value of the assets they actually hold. That is a massive vote of confidence that SBET just doesn't have.
And here's why that matters so much. A high MNAV isn't just a number to brag about. It's a powerful strategic weapon that lets a company create this incredible self-reinforcing cycle of growth.
See, because BMR's stock trades at that premium, they can sell their own shares at these high prices to build up a huge pile of cash. Then they just wait. And when the price of ETH takes a temporary dip, they swoop in with that war chest and buy more ETH on the cheap. It's a brilliant cycle. And SBET, with its low MVNEV, they're completely locked out of this game. BMR is playing offense, while SBET is stuck playing defense. And the stakes in this race could not be higher. If we just zoom out for a second, you see the bigger picture. The weekly demand for ETH from institutions like these treasury companies and the new ETFs is over 1.2 million ETH. The new supply being created, just 19,000. That means institutional demand is outstripping new supply by a factor of almost 70 to 1. It's an insane supply-demand shock.
Which brings us right back to our puzzle. In this high-stakes race to grab a scarce asset, simply owning billions of dollars worth of it isn't the whole story. It turns out the real winners are going to be the ones who can master the market's game, using smart communication, building confidence, and executing a killer strategy, not just to hold the treasure, but to grow it. It's a powerful lesson in a whole new financial world.